Hi there, I'm Dale, Director and Chartered Financial Planner here at Modulus Financial Planning. I just wanted to jump on and basically talk about protection. So we always kind of talk about there's three main steps to get yourself on track. And one is very simply never spend more than you earn, because long term that's just going to end in problems. Two is protect yourself against the worst happening or disaster, and that is if you were to die or if you get an illness or if you're just not able to work, what's going to happen to you and your family. And then once you've done that, that's whenever you start investing for the future, to basically make your life easier and give yourself a bit more options. So the one I want to really focus on here is step two, and that is protect against disaster. So there's three main insurances that we talk about. So number one is life insurance. So basically it's the simplest one. If you die during the term, it will pay out. The second one is critical illness insurance. And again, very much like life insurance, you insure yourself for a large amount, maybe 100, 200,000 pounds, and it will pay out if you are diagnosed with one of the specified critical illnesses. Now, they're the two simple ones. The third one that is most common and that we always kind of talk about and think people should have is income protection. And what income protection is if you are unable to work for an extended period of time for pretty much no matter what reason. It can be a critical illness, it could be mental illness, it could be an injury, it could be a broken back, I don't know, it could be anything. Basically, as long as you cannot do your job for medical reasons, then it will pay out. And what it does is rather than paying a lump sum, it will pay you a replacement income. So I'm just going to draw a little picture here, which kind of just explains it a bit better. So let's look at your lifespan of working time. So we start at around about age 30. We're going to aim to finish around about 68, which is the current state pension age for a 30-year-old. So if we're currently on an income of about £40,000, hopefully that income is going to increase over time as you get pay rises, whether that's just with inflation or maybe you've worked your way up the job ladder. What happens if, let's say, age 33, you're in a car accident and you're injured enough that you aren't going to be able to work? So your income just stops. Right. Normally, what will happen is you'll have some sort of sick pay depending on your job. You might get 30 days of normal pay and then it'll reduce. If you're in a public service job, you might get 3 months or 6 months, maybe full pay, and then it will decrease. But if you're just in the private sector, quite often you will hit statutory sick pay. So what we can do, because obviously during this time, you're at home, your family's still there, you still need to eat, you still need some sort of money coming in, we take what's called an income protection policy. And all that does is that whenever you can't work, it'll pay an income. And the idea is we take it out to pretty much track your income. It can only pay up to a maximum of 60%. The reason for that is simply because there has to be an incentive for you to go back to work. So that would pay out £2,000 a month or £24,000 a year, completely tax-free. That basically gives you an income to continue paying the bills, putting food on the table, and still living some sort of life. Now, once you've recovered, you go back to work, and then you're back to earning £40,000. And the beauty of the income protection policy is you can claim on it multiple times as long as you've kept on paying the premiums. So what then, if you're working away absolutely fine, and then at age, call it 60, all of a sudden you get some bad news and you're going to have to go into hospital, you've got operation, you're going to be off some time. Again, your income's probably going to stop from your employer. But if you've got that income protection, you've been paying it and it's been being maintained, you're going to continue to get that income up until age 68, unless you go back to work. Historic policies, they didn't used to be that good. They used to kind of just cover salary, and now they've got much more beneficial. They cover dividend earnings as well. So even if you own your own business, as long as you can show a track record of a salary and dividends, they'll be able to take account of that as your full earnings. The problem that everyone has with this is, well, I'm not planning to get sick or I'm not planning to be hurt that I can't do my job. That's all well and good. You can take the chance if you want. But if you walk around the hospital and ask everyone in the bed, were they planning to be there? You can bet everyone's going to say they never thought it would happen to them. And that's the big problem. So just to put it into kind of context of price and whether it surprises you or not. So if we were to do this exact policy to pay out £2,000 a month for a 30-year-old until age 68, the monthly premium is between about 30 and £35 at the minute. And that's based on just standard medical underwriting, non-smoker, a job that isn't classed as a high risk or manual job. If you were a 40-year-old looking the same policy, it would be about 50 to £55. There's lots of different options that can change the price. So we can change how long it takes for you to be off before it starts to pay. We can change whether or not the amount goes up or down. And we can basically change it to whatever you like for lots of different options. But it's something that we'll always be talking to you about because, as we say, you always have to protect against disaster. I always want this to be the very worst investment that you've ever had, because that means you've paid all these premiums and you've never actually had the claim on it. So that was just a quick diagram to try and put some kind of background to what income protection actually is. It's something that you never want to have to claim on, but if you do, it's probably going to be the best money that you've ever spent. So if you've any questions or want to find out any more, please just give us a shout on the usual ways. Email, phone, any of the social medias, and me or John will be here to hopefully help you out. See you later.